Hi everyone, welcome back to our channel. Adi here. So in today's video we are going to review a 20,000 monthly SIP portfolio in mutual fund. So remember, this is for aggressive customer or investor. So this is a part 1, and part 2 of the video we will make a 20,000 portfolio for a conservative or moderate type of investor. So let's the video get started and discuss about the portfolio. So in this portfolio we are generally have 10 to 12 funds. So we are diversified to different category of funds. So the first one we are going to discuss about your large cap. So here is your Canara Robeco Bluechip equity fund, which is under large cap category. So it is under Canara Robeco AMC. If you see the AUM, which is also at good one, 8,667 crore. Expense ratio is very good, 0.42, which is below 0.5%. Exit load expected 1% within 1 year if you redeem it. So if you see the annualized return for last 3 years, it's around 16.3%, which is very good. But this year it's in minus 2.7%. So this year is not able to perform up to its level comparing to last 3 years or 5 years, but this has been a good fund and it is expected to give good return in future. So you can start a 1,000 rupees SIP in this fund, Canara Robeco Bluechip equity fund. So the next two are considered large cap and mid cap. So here you will have exposed to both large cap and mid cap. So Quant large and mid cap fund. So it is under Quant Money Manager Limited. AUM at lower side 439 crores. So as you know, once the AUM grows, then the return will be good and constant. So if you see the expense ratio, still okay, 0.56%. Exit load, there is no exit load, so you can exit from this fund at any time. You don't have to pay any extra fees. So if you see the annualized return, as I know, most of the Quant large cap, mid cap or Quant Flexi cap, most of the Quant fund you can say is giving good return for last 3 years. You can see 26.6% annualized return for last 3 years. This year also it's giving 10%, which is very good considering the market volatility. So you can start a 1,500 SIP in this Quant and large and mid cap fund. So the third also we have considered the large and mid cap. This time it is Kotak Equity Opportunities Fund. So we generally consider two fund in a same category because we want to diversify our investment into different funds. Let's say one fund it doesn't do well, then we have the other fund in the same category which will do well and your investment is good. So if you see under large and mid cap category, we can see Kotak Equity Opportunities Fund. It is Kotak Mahindra Asset Management Company. So AUM if you see 11,555 crore, which is good. Expense ratio is also okay because it is around 0.6%. Exit load is same. If you redeem it within 1 year, you have to pay 1%. And if you see the annualized return, it is also one of the good fund under large and mid cap category for last 3 to 5 years. You can see the return is around 18% for last 3 years, and this year also it is giving 4%, which is still okay. And you can start the same 1,500 SIP in this fund. So basically large cap and mid cap you have to put totally 3,000 rupees in two different funds. So next category we are going to consider small cap. So we have considered Quant small cap fund. So if you see the AUM is also okay, a little bit lower side but still okay, it will grow. It's around 3,000 crore and expense ratio if you see 0.62, still okay. And if you see the exit load 1% if you redeem it within 1 year, that is also expected. And if you see the return for last 3 years, it is very huge, 52.1%, which is very exceptional and huge. This year also still for giving around 4%, still okay because the small cap category stocks has been very volatile for last 1 year. So here in the small cap category you should expose 2,000 rupees in SIP for under this fund. Next category we have introduced is your value fund. So as a 20,000 rupees aggressive customer, you should have some fund allocated to value stocks. So here we have considered ICICI Prudential Value Discovery Fund. So it is basically ICICI, Prudential, AMC. If you see, the AUM is very huge, 27,000 crore. This has been a good fund, giving good return for last 3 to 5 years. But the expense ratio is bit higher side, 1.22%. It is expected for any value fund. So if you check other value fund also under other AMC, it will be nearly 1% or more than that. So it is expected. Exit load, it's around 1%. If you redeem it within 1 year, that's generally the constant. If you see the return, it's giving around 25% for last 3 years, which is very good. And if you see this year also, it's giving good return, 10%. This year considered is a good return. So you can have 2,000 rupees exposed to this category, value category fund. So the next one is Flexi Cap. So here also in Flexi Cap we have considered 2 funds. One is Parag Flexi Cap fund. So most of you know about it. So its AUM is very huge. So only thing, if you see the AUM, once it grows more, how much it will grow fast we need to see. So if you see the expense ratio, it's around 0.76%. Still okay. Exit load, if you exit within 1 year, you have to pay 2%, and if you exit between 365 to 730 days, which is 1 year to 2 year, you have to pay 1% exit load. If you see the return, last 3 years it's giving good return. This has been a good fund for last 5 years. Everyone know about it. This one is the best fund under Flexi Cap category. So last 3 years it was around 22%, and this year if you see most of the Flexi Cap fund like PGM or Parikh, they are in negative. Here it is around minus 6%. But this been a good fund and expected to do growth more. Only you have to check the AUM part. So you can start your investment around 1,500 in this category. So next fund under this category is your Quant Flexi Cap fund. So all of you know Quant fund has been doing very good for last 3 to 5 years. Here also if you see, its AUM is 825 crore, still lower side, but it will grow. Expense ratio if you see, still okay, 0.58%. No exit load, you don't have to pay any fees if you will exit any time from this fund. And annualized return expected last 3 years, you can see 37.3%, which is very good. And if you see this year also 5.6% in positive. If you compare it to the Flexi Cap or PGM India or Parag Flexi Cap fund, they are in negative, but this one is around 6% positive. Similarly, you can put 1,500 at SIP. So total 3,000 under Flexi Cap category. Next we are going to take another new category, which is a focused fund. So if you see, it is ICICI Prudential Focused Equity Fund. So you can see AUM is around 4,000 crore, which is good. Expense ratio 0.6, still okay. If you see the annualized return for last 3 years, giving around 22%, which is very good. This year also around 3%, still okay. But this been a good fund for last 3 years. So to diversify our investment, we have added this fund under the portfolio. You can start investment around 1,500 under this fund. So the next one we are going to see is the multi-cap fund. So again, Quant active fund. It's been also a good return fund for last 3 to 5 years. If you see the AUM is around, it's also still lower side, but it's okay, 3,500 crore. Expense ratio is okay, no exit load. But if you see the last 3 year return, it's giving around 36% annualized return, which is very huge. Last 1 year also around 6.5%, which is good, still okay. So you can start with 1,500 under this fund. So generally multi-cap we have put 2 fund and total of 3,000, 1,500 in Quant active. Next this one, Mahindra Manulife multi-cap Badhat Yojana. So this has been a good fund, but it is under radar because most of you may not be aware of this fund. But this has been giving good return for last 3 years. If you see the AUM is around 1,500 crore. Expense ratio is very good, 0.44. And if you see the annualized return, it's giving you around 22% annualized return for last 3 years, which is very good. This year is also minus 3%, but this one is a good fund and good expense ratio, and it's giving good past return, so you have to check on that. So here you can start as investment of 1,500, so total 3,000 under multi-cap. So next we are going to have some exposure to the tax saver fund. So remember, this tax saver will have a lock-in period, so there will be no exit load, but you cannot withdraw money within 3 years. So after 3 years you can exit. So you can see Kotak Mahindra, Kotak Tax Saver Fund, it's under Kotak Mahindra AMC. AUM is roughly about 3000 crore. Expense ratio you can see also okay, 0.68%. So if you see as a tax saver fund, its return is good. Last 3 years you can see 18%, and this year also 3.5%. It's still okay. So you can put 1000 as a SIP in ELSS fund in Kotak tax saver fund. So next, this is a sectorial fund. Okay, so this is also new category added as part of diversified. This is sectorial fund. So current in the current situation we should have some exposed to the bank and financial services. So generally if you see last couple of months, the bank and financial is giving good return, and it is expected because the rate of inflation is going up and the repo rate is going up. So it is expected bank stocks to go up. So we'll have some 1000 rupees exposure to this sectorial fund, Tata Banking and Financial Services Fund. So if you see, the AUM is also good, 1305 crore. Expense ratio is 0.58, still okay. Exit load, if you exit within 1 month you have to pay 0.25, but still okay. Sectorial fund, it is expected. If you see the annualized return, there is one thing you have to see, 11.6% is giving from last 3 years, but this year it's giving 11.5% because all the bank stocks are giving good return for last couple of months, 3 to 4 months. So you can put 1000 rupees as an exposure to a sectorial fund in under banking and financial services. So next we will go to one hybrid fund. So we should have some more diversification. So this one is your Edelweiss aggressive hybrid fund. So basically AUM is at a lower side, 432 crore, still okay. It will grow with time. Expense ratio is very good, 0.51. If you see the last 3 years annualized return, it is giving around 16.3%. So as a hybrid fund, it is a good return because it's not a fully equity, so it's a hybrid fund, more diversified and all those things. So if you see this year also 5.4%, it's giving good return. So you can have 1000 rupees investment in hybrid fund category. So next we'll go to index fund. Okay, so we'll have exposed to Nifty 50 index fund. So you can consider the IDFC Nifty 50 index fund or Tata Nifty 50 index fund. So both the fund you can choose any one of. So here I have put IDFC Nifty 50 index fund. So you can see this has been giving good return. So if you see AUM is lower side, 582 crore, which is okay. Expense ratio is very good. It is less than your Tata Nifty 50 fund, 0.1%. No exit load. If you see the last 3 year return is giving 15%. So it is good return considering this is an index fund. This year 1.7% because there is a very much volatile, and if you see the index is going up and down, so it is expected. So you can have 1000 rupees exposure to the index fund. So next we are going to have some exposure to the international market also. Though the international market, all the funds are gone down, the stocks are gone down around 20 to 30%, but we should have some exposure to international also, because it's not like the market will go down forever. It will come back to its stage after maybe some year or some month. So this one is a good fund you can have. This one is a fund of fund. So basically Motilal, Oswal, Nasdaq 100. So it will invest in your Nasdaq 100 ETF. So whatever ETF is available in the Nasdaq 100, it will buy and invest in that. So that's why it's fund of funds. So you can see AUM is around 3000 crore. Expense ratio is also okay, 0.1%, which is good. So there is no exit load. You can see last 3 years return is around 13%. It has gone down because it was giving good return, because last 1 year is around minus 18.3% its return, because all the stocks, if you see Amazon, Apple, all the stocks have gone down around roughly 30% around. So this is expected, but you should have 500 as a small amount exposure to this international fund. So this is a 20,000 portfolio whole you can consider as an investment for this year. So for now you can consider all these fund to invest. So we'll have a review after a quarter, and if you want to change some allocation, or we have to stop investment in some fund, or we just need to invest more in some fund, so we'll have a review after March. So this is a 20,000 portfolio. I have also made a 10,000 portfolio investment in mutual fund and 5,000. I'll put in the link so you can check it out if your investment appetite is 10,000 or 5,000 a month. So if your investment appetite is around 20,000 or more than that, you can consider this portfolio as your investment. So I hope you are very much clear how to invest in mutual fund as a portfolio of 20,000. So please hit the like button and subscribe to the channel. So thank you everyone.